Hey everybody, welcome to this video. This is Shane Smolyan from Wolf Trader Futures, and this is a market update for Wednesday, June the 10th, 2020. And boy, what a day did we have today. We had our Fed decision, and the Fed essentially just held the line on the interest rates, but had some really good things to say in the press conference. And the Main Street lending facility is coming this month, and it's going to be a good thing, I think, for the economy and the small businesses. But I'd like to start here with our lunar eclipse because this is the dominant feature of the week, and I've sent this out to everybody to explain what should be going on. Now, this zero represented Friday. This was the day of the actual eclipse, and this was Monday. So according to this, we should have gone up for one more day. And here's Tuesday, here's Wednesday. That's where we are now. Thursday, and then Friday. So we're kind of on track for this. And this really doesn't surprise me that it started selling off because the planetary speed index is in a sell. So this is lining up perfectly for our sell-off into Friday. If the Fed juice stays in a long or a buy position, I'd like to consider a long position on Friday. So let's go to this S&P and talk about where we are in terms of this market. This is a very, very interesting time because there's a lot going on. So first of all, let's take a look at the Fed juice here. The Fed juice is down here, and this is in the red. This has been in a consistent buy pattern. It's modeled this market beautifully on the way up. And we always talk about that we want to line up this Fed juice here, which goes with this indicator here, with the planetary speed index here, which is the black one, which goes with this indicator down here. And when both of them are to the upside, we get what's called an upside advantage, and that's what this move was here. Now, this upside advantage ended here, and the market continued to run up into a falling planetary speed index. So the black one here, this black arrow, is the planetary speed index, and that is the most important astro indicator that I have found on the S&P 500. Now we have other indicators like the CAT which do pretty well too, but this is the one that I consider to be the gold standard. And when this is down, I don't like to buy a market, even if the Fed juice is up, when this is in a sell, because what can end up happening is what's happening right now. It can run up and then it can retrace right back. Okay, and then you end up where you started here, and you spend all that time wasting time, and you ended up back where you started. So that's definitely not good. And this RSI level here on the S&P, it hit 93. Okay, so 93 gets to be what I call a stinger, where if it gets to that point, it can stun the market, and it can stun it in an uptrend, and it could keep going up, or it could mark an important top in the markets. Now, I think we're in the scenario of this is just a stinger. It stunned the market, and I think it's probably just going to pull back into Friday, and then I think we're going to have a chance at the next leg up into this market. The solar eclipse is coming up on June the 20th, and that is generally a very bullish event. So right now, this is unfolding exactly as I expected it to, okay? So right now, this RSI is down around 54.7. And so I'd like to see a range. I said I want to see a range between 55 and 65% in this uptrend. But hey, if we get down to 45, that would be great. A lot of times on this uptrend, you can see that the market went into the low 40s or the mid 40s before it turned. There was the one time here where it went to 34. Currently, we're at 54, and we're only at Thursday, so this is going to be Thursday tomorrow. So I'd really be happy if we could be somewhere in this range, which we already are in now, by Friday. But it's too soon to consider buying this because we don't want to get ahead of the planetary speed index, okay? So one of the things about the planetary speed index is that this market can sometimes turn at the last second, okay? So for example, if you go back here on March 22nd, you can see the planetary speed index went in a buy here, and it stayed just kind of wandering around, and then at the very last second, it went up into April the 6th. So we got to be careful about this. So this is why I want to wait until the actual close on Friday, and then we will reevaluate where we are, okay? Now, what has to happen for us to consider an upside advantage on this market? Because I still think it has the potential to do a melt up. This Fed juice here has to stay in a buy. Okay, so the risk of this declining is that it could jolt this out of a buy. Okay, so if it jolts this out of a buy on Friday, there's not going to be a long entry. Okay, it's just going to be more flat, more waiting around. But I think there's a good chance that this Fed use could remain in the buy position on Friday. But this is essentially, like I said, following what I expect to happen. And so this is good. So this is right in line with what we want to see on this market. Okay. Now I'm going to show you a couple cones here. This first cone was the trajectory that I expected coming into this period. Now I told you that I typically don't like to forecast out more than like a week or two, simply because it's very difficult for me to foresee what's happening out here. So this was the cone that I put, and even when this got out of the cone like this, I felt reasonably confident that it would come back into this cone, and we've come right back into the cone here. And so the center of this cone will be somewhere around here by Friday, and so that would be an ideal setup as far as I'm concerned if the Fed use is still in a buy position. So I'll look at another angle of this here. So this is the melt up scenario that I talked about. And so ideally, this is 612. This is going to be the cycle low on Friday. So ideally, we're right back into that cone. And so this is ideal. Now it's actually accelerating faster, even a little faster than I thought it would. But the point is, there's no position, so we don't have to worry about anything. So I don't like to be in these situations where the Fed use is up and the planetary speed index is down, because you start to get crazy stuff like this. You don't get a consistent move. You get retracements like this. So this is why sometimes it's better just to be in no position on these markets. So I just want to point that out, because a lot of people are uneasy about being on the sidelines, but sometimes when there's no agreement, the move is flat. Okay, so that's the idea there. Okay, so we've established the fact that there was no advantage on the S&P. When that happens, it can tend to retrace. That's what it's doing. And also that it followed the path of the eclipse almost perfectly. So we're following this path of this eclipse. Now let me explain to you, some people have asked me, what's the difference between this eclipse and a transit graph that I show you, okay? So this lunar eclipse is a single transit, okay? Single transit. Now, typically, I do not pay attention to what two planets are doing. Okay, this is between the sun and the moon and the earth. I don't really pay too much attention to that unless it's a very high probability event. And a lunar eclipse is a very high probability event. There's some outer planets that make aspects that I might look at. For example, next year, Saturn and Uranus are going to make squares, and the market does not like that. So I'm going to evaluate that on it. This is called an efficiency test, by the way. So I'm going to evaluate that on an efficiency test. Okay, so this tells you how it behaves on this side. But you can get into trouble on these if you start modeling small transits, because it can be overshadowed by the big picture. And so this is why I'm here to help you guys balance out, the evidence. You look at, we weigh all the evidence, and then we'll decide what's going to happen on this market. Right now, though, I'm definitely glad that I'm not in this market, because you never know, right? So we just have to let this unfold, and we'll see what happens here. So, this is the intraday here. So you can see there's a pretty big breakdown here, intraday. This was the opening price of the Fed. And, we'll see. The main thing that I believe, though, here is that this Fed juice has to remain in that buy pattern. So today is meant to be a quicker market update, but let's just take a glance over here at the rest of the markets. I think there's some interesting statistics here. Now, those of you who sign up for the metals and the currencies, I'm sending out these daily statistics. So this is really important. This tells us the statistical behavior of each market. In addition to the S&P, I do this also. I put these statistics out there for you guys to see them. And so tomorrow, very interesting. This is just, I think, lining up for a potential down day in equities. Copper has the worst day of the week next week and the highest day of reversal. So we'll see what happens here. Silver, Thursdays is always a strong day for, at least locally. In the last few weeks, silver has been, Thursday is silver day. Gold actually gave us an upside advantage tonight. because it lined up the Fed juice, the cat signal, and this percentage together. So that's what this means, TCP. So that's good. And this bond, we've caught a pretty good trade here. We got long yesterday on this with an upside advantage, and it's still upside. And I think this one could last for a couple days. So you've got an upside tomorrow, the strongest upside on the bond tomorrow. So that's possible. And then of course you have the weakest day on the S&P tomorrow, highest day of reversal. But I look at this number first here. If you got a 5 on the downside, that's the weakest day of the week. So you line all this stuff up, and it definitely looks like tomorrow could be some type of a bearish day for the markets. And so it's definitely starting out that way, but we'll see where it ends up, um, going forward. Notice down here also on this RSI that I have this bar will paint itself red every time it hits that 93. And that 93 tends to be, like I said, it tends to be a stinger that could either stun it on an uptrend, until it continues higher and then it would hit 93 again, or that can be a top. But either way, I think we'll be okay because I think the Fed juice will show us ultimately, uh, you know, to stay out or get back in. It'll tell us the strength of this market. So next, looking forward here. So let's say that the bullish case plays out. So you've got this 620 solar eclipse here. And then you have another lunar eclipse out here on July the 4th. So if the bullish scenario plays out, the solar eclipse will come, it will be bullish, and then continue up to the next lunar eclipse around July the 4th, because that's also a positive seasonal week before the July 4th holiday. Now, for everybody who is in other markets like metals and currencies, I'm starting to actually send out an eclipse bonus file, like a little an extension of the newsletter that's going to show you the eclipse values for different symbols. So for example, gold might behave very differently than the S&P. The S&P is bullish, but for some reason, like gold likes to top and reverse on the solar eclipse. So I'm also going to send this out for the currencies and the cryptocurrencies, but I just got the metals out today. I mean, we have 10 days to get ready for this, so it's no rush on this, but just so you know, so you'll be able to see that on each symbol. How does each symbol behave to this solar eclipse coming up? So I'm also going to be doing a webinar next Saturday, June the 13th at 6 o'clock p.m. If you want to check out how some of these solar cycles have played out across history, I'll talk about that. And anyway, so that's basically it for this update. This is, like I said, this is meant to be a quick update on the markets. And so as it looks right now, if this falls into that range and the Fed just stays in a buy, we could get a potential long entry on Friday, but that's going to depend, like I said, on the Fed juice. And then going back to this lunar eclipse, we're pretty much following this path perfectly. And so tomorrow we would be here, and Friday would be a low, and that would be an important low because going out into the solar eclipse, you're talking about potentially 3 weeks of a run or more on this. So I mean, think about this: if we're on June the 10th, if we're on June the 10th now, and Friday would be, this would be 612, and I'm talking about a potential high on 7.4, then you could definitely get that melt up scenario. It could definitely happen, but I would just urge caution just to wait and let this develop, because if this thing does drop a lot and the Fed just goes into a sell, we're going to have to wait. And I know waiting is not a lot of fun for people, but my primary concern right now is to steer you clear of danger. Okay. And so when we have a conflict of signals, we don't want to be in the market. And then secondly, to give you the highest probability setup. So I want to make sure we're not in any type of danger in this situation. And then I will let you know if we do get that setup to get that melt up type scenario going forward after the 12th. All right, guys, that's all I got for this video. Thank you so much for watching. Thanks for subscribing, and I'll talk to you soon. Peace out.